Mic test, mic test. Alright, the webinar will start in a minute or so just hold on. Stand by.
Sorry. Hi everyone. Good morning. Thanks for dialing in. Thanks for tuning in. Sorry. Okay. So today we're going to talk about there's not really a macro update. So we're just going to talk about the company for today, which is United Engineers. But before we go on to United Engineers, I thought I would share with you how the banks performed during the most recent third quarter results release. So thus far, last Friday, DBS and OCBC has already released their results, and that would be and UOB, the last one, will be releasing their results on Tuesday. So how DBS and OCBC has done? Well, both of them actually did pretty well. Both of them saw very healthy growth of loans quarter on quarter at 2 to 3%. Net interest margins for this quarter has actually been stable at just slightly down by 1 and 2 bips for OCBC and DBS respectively. Fees and commission continue to be very strong, gaining good traction. For this quarter, we saw lower trading income. This is because of the QE assessments. So because of the lack of tapering in September, as per previously forecasted by some economists, the positions which DBS took actually was negatively affected, and that cost them quite a bit in the net trading income area. For OCBC, similarly, because of the uncertainty over the QE, they also took a hit on the net trading income. But overall, we saw very good results, which were actually above expectations. And for DBS, we continue to be positive on it. And in terms of the outlook for UOB, we continue to expect net interest margins to be relatively stable. We continue to expect good loans growth and also good traction on its fees and commission. Similarly, we expect some volatility with regards to the trading income. Now I'll pass it over to Yong Kai, who will talk about United Engineers.
Hi, this is Yong Kai here. Today I'll just be giving a non-rated presentation on United Engineers. Okay, so we believe that there's hidden value after it has acquired 56.8% of WBL. Just a snapshot, the share price closed as of Friday, $1.86, which is on a very low range of the 52-week. Okay, market cap is about $1.2 billion, which is actually below the shareholders' equity of $1.6 billion. This has been adjusted for the rights issue of $450 million just a few months ago. So at first glance, you are looking at it trading below PB. Okay, there's 4 major divisions: property development, property rental services, engineering construction, and WBL Corp. Engineering and construction was partially spun off in 2011. UE now owns 68.2% of this SGX-listed subsidiary. It's worth $172 million as of 30th October. At the same time, it has launched a mandatory conditional offer for WBL Corp in 2013. Currently, it owns 56.8% of WBL, whereas concert parties, OCBC, Great Eastern, and Lee family owns another 39.5%. WBL the trading has been suspended and is pending delisting. UE itself, minus away UENC, minus away WBL. UE itself owns $2.45 billion of investment and development properties. This is the carried value on the balance sheet. UE BizHub East, carried at $290 million, was recently divested for $518 million consideration, inclusive of rental supports. So, for this presentation, we had to deconsolidate the UE ENC and WBL from its financials. So what we want to highlight is that PP&E is actually much lower, is only about $100 million. Negligible inventories and trade receivables. Bank balances and deposits actually materially lower at $177 million. This is also because the rights issue proceeds have been all used to pay down the borrowings. We see that equity attributable to the owners is $920 million, and borrowings, instead of the consolidated $3.2 billion, you're actually looking at a slightly lower $2.1 billion. Once again, equity attributable to UE itself, less UE, ENC, and WBL is $920 million. So we just want to let you all have a quick look of this sum of parts valuation. We arrive at $1.8 billion, which is 50% higher than the UE market cap. Currently it's trading at 1.86 per share, which is way below $2.81 per share RNAV derived under our conservative assumptions, which we are going to lay out now. Okay, UE has a property portfolio. We'll give an overview. It has the UE Business Hub East, which to OP last year. 73% of business park and 90% of retail space has been leased out. It also has a Park Avenue Changi Hotel that started operations this year. Valuations in $293 million, but was recently divested for $518 million, inclusive of rental supports. Although they expect only $87 million divestment gains, we actually think that the $110 million provision for rental support could be too conservative. Just for perspective, this is roughly 80% of the full rental supports that they are providing, that they're committing to Viva Industrial Trust, who they are divesting to. UE Square is a 999-year leasehold property. It's completed in 1997. Currently, it has 869 years balance lease left. Okay, so its office space and retail are fully leased out. It also has 150 service apartments. So we think that the office space could be undervalued. Given our assumptions is at around $1,310 per square feet NLA. Currently, its rentals, the listings are going for $7 per square feet, but earned rental could be slightly lower, say $6.50 per square feet. Even at 4.5% cap rate, we think that the office space will be worth more than $100 million higher at $548 million. Mixed use development at one-off, so it's a 91-year leasehold property. It's open last year also, 2012. The retail mall has been fully leased out, and there's a 271 rooms Park Avenue Rochester Hotel. So we think that the valuations are also depressed as well. Back of the envelope, we assume that Rochester Mall could be worth $105 million, and the hotel could be worth $203 million. UE Business Hub Central was acquired in 2010 for $25 million from Motorola. This actually classified as PPE at $31.3 million, but what we understand is that they don't have any onerous sales or leaseback terms attached to this property. So at a market rate of $2.50 per square feet rental, 9% cap rate, which is roughly what the Viva Industrial Trust has first right of refusal to, UE Business Hub Central could be worth $96 million. Once again, this is the 32-year leasehold property, industrial building at Ang Mo Kio. Seletar Mall, I won't go too much about it because I think that they paid a fair price of $1,700 for land cost. UE owns 30% of this mall together with SPH. Park Avenue Robertson is a small property valued at $28.5 million. We think that the actual value could be worth maybe $3 to $4 million higher. 79 Anson Road was purchased for $410 million just last year, and so it's fully leased out. This is a freehold commercial property in Tanjong Pagar. Okay, lastly, UE has two residential developments. One is 8 River Suites, and the other one is Osville Residences, each is the EC. We think that both can be, the development profits after tax could be around $94 million. So in all, we are looking at profits and valuation surplus of $387 million after deduction for the HQ rental. So currently, UE is taking up roughly 50% of the UE Business Hub Central. More positives that we have not quantified is the intention to expand UE Business Hub Central by 32% to 500,000 square feet GFA. So the plans has been in place since 2010, but they're also looking for a tenant for the build-to-suits. So that not only can you command slightly higher rental, but you also remove away the execution risk. The Orchard Gateway project, upon completion of phase 1 and phase 2, we are expecting roughly $30 to $50 million development fees payable. Lastly, we are also looking at a release of up to $110 million provision from the rental support for UE Business Hub East. UE ENC, we are just going to give a quick outline. So this segment was partially spun off in 2011 as onto SGX. Market cap is $252 million versus book value of $209 million. So the PB is 1.21 times. They have announced roughly contract wins of $211 million, and they might be slightly more because they have minority interest in various residential projects that entitle them to the construction project without any tendering. So we estimate $650 million order book as of end second quarter 2013 and 10% margins for this. I just want to bring you to note revenue by geography. 33% was in Brunei last year, and over 5 years they earned a combined $172 million profits versus the market cap today of $252 million. So they have 4 minority stakes in residential developments. 2 of them are ECs. One is Prince Charles Crescent with Wing Tai and UE. This is at the Queenstown area. So what they after refactoring all this, UE owns 68.2% stake in SGX listed UE E&C, and at today's market price is worth $172 million. WBL, they actually, so UE once again, they just launched a mandatory conditional offer for WBL this year, and they own 56.8% right now. So WBL itself owns 2 majority stakes in 2 listed companies. We said that we think that 20% discount will be appropriate to reflect a struggling electronics business. So even after we discount, we are looking at the stakes are worth $242 million. Just of note is that MFlex, which is the Nasdaq listed subsidiary, is really trading at a 52-week low range. Both subsidiaries are also trading at 0.8 times PB, and given a 20% discount they have tagged on, now we are valuing it at 0.64 times PB. So pessimism could have already been more than priced in. Lastly, you might want to ask yourself, is a control premium warranted for WBL's majority interest in MFlex and MFS technology? Automotive earns $30 million profits last year. They've already earned $20 million profit this year, and we think that they could be earning somewhere around $27 million for the full year of 2013. So they have operations in China, Hong Kong, Thailand, Malaysia, Singapore, and Indonesia. Okay, this is could be an asset play as well because they own 25,677 square meters of land along Linky Road and Alexandria. So they are actually underdeveloped. The existing GFA is only 18,000 square meters, but maximum is 64,000. However, they only have 38 to 39 years of balance lease left on this 99-year leasehold land. CBRE previously have valued this land at $183 million on the basis of redevelopment. At 10 times PE, we think that automotive could be worth $270 million, which is really below the $340 million valuation derived by KPMG during the mandatory conditional offer. And this also excludes the above land, which we think is more appropriately categorized as PPE, which is used in the ordinary course of business. Engineering and distribution, so they have sales of construction materials and mining, distribution of automotive parts, equipment and LPG, systems integration. So the profits are actually pretty stable, minus the Simpsons integration, which had the profits down from profit making to a loss making this year. So this segment we think that conservatively it could be worth $180 million based on 12 times PE, which is also below the $204 million in the circular. Okay, what's interesting is that they own the 74% owns Sand Mining subsidiary, which earns $3 million net profits in 2010, has 9.86 million square meter of freehold land in coastal Queensland in the town of Lingy. So this is midpoint between Brisbane and Sunshine Coast, 50 km from both cities. The real estate listings I've come across list the properties from 180 to 643 Aussie dollars per square meter. So even at $200 per square meter, and looking at the 9.9 million square meters of freehold land, this will work out to $2 billion of 2 billion Australian dollars gross development value. Compare this to current valuations of $36 million on the basis of 12 times PE. However, this piece of plot of land for now is a key resource area. It has to be completely mined first. So it is not zoned for residential, and we are not factoring this into RNAV. Okay, property development. This is the last segment of WBL. So it has actually entered China's residential segment since 1990. It fully and partly owns developments in Shanghai, Shenyang, Suzhou, Chengdu, and Chongqing, with gross land area of 908,000 square meters and book value of 2.48 billion. More than 3/4 of this land area is still pending development plans and could be worth more in the future. Even though the lease expires from 2041 onwards, but industry convention actually regards this leasehold land as freehold for valuation purposes. Because of the mandatory conditional offer, they actually engaged this Shanghai Lixing Appraisal Co., which has since appraised the real estate to a higher 3.88 billion valuation RMB as of 31 December 2012. Okay, but what I do want to point out is that 40% of this land bank in Yanqiao Village, Suzhou, has remained idle for the past 10 years because the PRC government has suspended all developments around Taihu Lake to protect ecotourism resources. So if you include this land in Yanqiao Village, Suzhou, and also apply 10% haircuts to account for uncertainties to Chinese economic and property outlook, our reappraised real estate values attributable to WBL would be 2.86 billion RMB. Okay, another thing is that WBL has adopted this completion of construction accounting methods. So going forwards, revenue and profits will be very lumpy because they're only recognized upon delivery to purchasers. So quickly deconsolidated the majority-owned MFS and MFlex. So what we find out is that it has $304 million of cash equivalents versus total borrowings of $604 million. After we set aside an arbitrary $50 million more cash for working capital, net borrowings increases to $330 million. So WBL revalued the sum of parts will be around $880 million. Some of the parts for the entire United Engineers will be as follows. We have the deconsolidated equity of $922 million. We have a revalued surplus and profits of $387 million. We have the 68.2% in UAE&C, which is 170. We have 56.8% stake in WBL Corp, which is 500 million. And we deduct away the intangible assets. Mostly is goodwill that derived from the acquisition of WBL above book. So even after all this, we'll look at the $1.8 billion subtotal for RNAV versus the market cap of $1.2 billion. What this means is that UE is trading at 0.66 times price over RNAV, and at 1.86 per share is way below the 2.81% per share RNAV derived under our conservative assumptions. Many considerations that we did not factor into RNAV. Okay, so a lot of you have noticed that the real estate and businesses are consistently at or below lower end of comparable property and valuation appraisals. We also have the UE B-Sub Central, which could be expanded by 32% to 500,000 square feet GFA. Release of up to $110 million provision for the rental shortfall. Orchard Gateway, we are expecting development fees payable upon completion of phase 1 and 2. They are also using their own capital to develop this Orchard Gateway. So once they hand this over, they could better deploy this capital. You can pay down the debts. There's a lot of possibilities. UAE and stake, even though the market value is at $172 million, but it could be possibly worth more. Book value plus order book profits plus 10% profit margin for development will equate to $340 million, which is 25% above market cap. WBL's majority stakes in MFS Technology and MFlex, we have already discounted them heavily. Right now, they are only valued at 0.64 times PB. Yes, they might warrant control premium, so there's some upside over there. Pacific Silica, which is a 74% owned sand mining subsidiary, could have $2 billion or higher gross development value if and when the redevelopment plans are confirmed. Okay, lastly, excluding the idle Suzhou residential land, WBL still has 386,000 square meters of land bank that could be worth substantially more when developed. So I've listed out in Shenyang, Chengdu, Suzhou, and Shanghai. These are the land bank they have and the reappraised value. Okay, once again, the RNAV is 50% higher than the UA market cap under our conservative assumptions. So I'll just like to remind everyone that every Monday, 11:15 a.m., you can sign in to our webinar, of which Hesai is quiet. What we'll go through is a market analysis, stock sector picture, and the Q&A. So you just go to the Poems website, the bottom right corner. So that's where you can sign in. Okay, now we are on to Q&A. Hi. So there's a question on whether the charts will be shown and whether we'll be emailing the slides. Okay. So today we didn't go through market analysis, so there won't be any technical charts. And yes, you can actually we won't be okay. The slides you can actually be obtained from the Poems website. Yeah, sorry for the break. Yeah, but we can actually obtain the slides from the Poems website, and we will be emailing the slides to you. We have another question about whether this is a good time to buy UE shares, and if so, what is your target price in a year's time? Okay, this is a non-rated presentation. So what we are really doing is that we want to bring awareness to this company. I think we have really give a very factual presentation on what's the revaluation, what's the upside, what's the downside. So if you think that, I mean, of course, RMV is not the fair value, but even then, we think that for RMV 50% higher than market cap could be attractive to investors. So once again, I just want to summarize UE. So the RNAV is 50% higher than market cap under our conservative assumptions. There are a lot of ways that this can work out, and because they have they are going to pay down debts. They have a majority stake in WBL, which they only just recently acquired, and they are going to exercise their options. So there are a lot of positive catalysts that could happen. Okay, we have another question for Poem Stock Analytics. It says that for UE has a consensus target price of 1.561 and recommended as sell. Okay, this is actually a very outdated target price, and is usually provided by Thomson Reuters, which is not reflective of our views. Then again, this is a non-rated presentation, so we are not giving a specific target price. We just think that at 50% higher RNAV, there could be substantial upside, but it's up to investors to make their own decisions. Next, we have another question. WBL will report results for the quarter. Will the results be good compared to last year's quarter 3? Okay, I think it will be tough because last year they still haven't really put in place this for property development, they still haven't put in place this completion of construction accounting method. And also the automotive was stronger last year than this. So we don't really have much visibility. But given that automotive earnings are below last year's one for now, we think that results might be slightly weaker. I just want to remind that the drivers for WBL, apart from the property land bank, the real estate land bank in China, we also have 10 times PE is very conservative for the automotive and is distributing luxury cars, which should be less affected by the Singapore series restrictions. Next, we have a question. What is the estimated growth rate for the next 5 years of UE? Okay, this one is really quite difficult to answer because UE is asset play, so you can't see in terms of 10% revenue growth year after year. What you're really looking at is the book value.
Okay, here's a question on what is the outlook for STI equity in November. Our stance is that for the STI, we have a cautious advance for November and December. So barring any unexpected macroeconomic situation, we believe that STI should be grinding higher. Might not be aggressive, but it should go higher. Oh, he left anyway.
Hi. So, okay, hold on.
Hi, this is Ken. There's a question on any reason for the low volume seen in equities. The reason is that right now, I think some of the retail investors are holding back after the huge decline in three counters, namely AsiaSense, Blumon, and Lion Gold. So since then, we've seen a slightly lower trading activities. Also, this is actually a seasonally slower period for the exchange, right? Most of the say the corporates more active in the start of the calendar year through to June. So December, I mean the fourth quarter is typically a seasonally slower period for equity activities. That said, we continue to expect the volumes to pick up moving forward, especially starting January. I'll just do SGX. On SGX one, there's also a question on what's the outlook for SGX. So once again, in the near term, you're going to see that volumes for this quarter will continue to remain muted. So that would have an impact with regards to the net profit because the lower security activities will lead to lower clearing fees, and that would then lead to lower securities revenue, and that will translate to lower net profit. That said, moving forward, we continue to expect that the derivatives will continue to gain growth in terms of volume. This will be driven mostly by four key equity futures, namely the Nikkei 225, the MSCI India, the China A50, and also the Taiwan index. Also moving forward, they're also launching new products which may be very attractive, such as the MSCI Philippines and MSCI Thailand. All this would help to drive growth in the derivatives revenue. On securities, once we continue to be positive on equities and given our more positive outlook on equities moving forward, we continue to expect a higher trading volumes, especially from January onwards.
Okay. There's a question to repeat the outlook on the STI in November and December. I just want to reiterate that for the STI, we have a cautious advance stance for November, December. We believe that the STI should be able to grind higher, though not aggressively. This is barring any unforeseen macroeconomic occurrences. Next question, what is the outlook for gold? Once again, we are long-term bearish on gold. On the short term, gold prices are consolidating, but note that long term we are bearish on gold. What is the outlook for Q1 2014? Okay.
On that, the outlook for Q1 2014, maybe I thought maybe this might be a good opportunity for us to reiterate our sector views. So that will also apply to bring to Q1 2014. So the sectors in which we're more positive on is the banks, the telcos, and also the industrials. Industrials includes your offshore and marine like Capricorn, which is actually one of our topics, and also that will also include your Ballsted and Pan United, right? In terms of the in terms of the sectors in which we are neutral in, we are neutral on commodities for the moment. That would be your due to the CPO outlook, right? Commodities, namely those like the likes of Golden Agri, but of course we see pockets of strength in them. We are also neutral on property. We remain slightly more bearish on the REITs because REITs continue to be more of a dividend play.
Hi, so we have a question on the dividends of UE. So UE has actually paid 10 cents dividend this May, 15 cents dividend last year. Okay, but going forward, because of this high debt load, we think that it will be more prudent for it to be paying down its debt rather than give out dividends. For now, we are still not too sure. But in any case, dividends are usually paid in May, so we should have more clarity, say next year. Okay, is there any other questions for Yui? Okay. Okay, so I just want to conclude this presentation. Okay, you have already seen that the RNAV is materially higher than the UE market cap. Okay, if you're sharp eye, you might realize that UE actually paid about $700 million for its 56.8 stake in WBL, which over here we are valuing it $500 million instead. We're not saying that they are overpaying or underpaying or whatever, no opinions on it at all, but just the fact that if UE had paid a fair price for WBL, we're looking at an additional $200 million RNAV. That's about 1/6 of its market cap today already. Yeah, that's one of the many hidden catalysts and upsides that we have not factored in, and still we attain a very high RNAV. Okay, thanks for sitting for today's presentation. We encourage you to join us for next year. Next week. Thank you.